We've seen a lot of volatility in the oil price. Everybody can't quite kind of figure out exactly what's behind that movement. Do you think the Saudis, do you think OPEC Plus have got a good idea? And how's it going to impact their thinking?
Well, I think that a lot of the movement is due to a variety of factors. I think the big drop that we saw last week was largely a financial one. We saw, there was a futures options expiration. We saw a lot of short sellers moving to cover their positions, take profits. And so that definitely explains the drop. We're in a particular time right now when oil prices tend to be lower. So seasonally, it's to be expected. But at the same time, we're seeing softer economic data from China. This is a concern of a lot of traders. We're also seeing some moves. We're seeing very strong production from the United States, despite anything else. And then we've got the Saudis who are coming out there saying, "Hey, all of these problems are due to speculators. By our calculations, supply and demand, are pretty good. We're looking for higher demand next year. Supply, can cover it." And so the market isn't really jiving with what they're saying. The problem with putting together some kind of an OPEC plus production cut for a meeting that's coming up, this Saturday, is that these things are complicated. There are a lot of moving parts. Everyone's got to agree on this, and I think you'd be hard pressed to get Russia to agree to a production cut, or at least to a production cut that they plan to adhere to. It's not unlikely that they could put something together. We've seen these things come together at the last minute, so you can't discount that they might look at the market conditions and say, "Hey, we do need further production cuts going into the next year." I don't think anything would start until 2024, but that also brings up the question: what about this 1 million barrels a day that Saudi Arabia is just keeping off of the market? It's a voluntary production cut they're taking on, and how are they going to square that cut with more OPEC plus cuts? I think it's a complicated situation, and the Saudis may decide that a cut isn't warranted at this point. They want to wait and see how the market maybe recovers from these short sellers before they decide to actually try to impact supply.
Okay, yeah, Ellen, I was going to ask you about the Saudis because, as you say, it's hard to get consensus among the entirety of OPEC plus, especially if Russia may have some problems with pulling back on production even more. So should we not expect to continue to see Saudi Arabia continuing to shoulder that burden kind of on its own?
That's a really good question. And if you look at Aramco's latest, their latest earnings, their revenue was down. And that is largely due to the fact that they're selling less oil. But it wasn't down all that much. So I don't think they're in some kind of revenue crunch. I don't think that MBS is breathing down their back to get oil prices up necessarily. So I think that what's probably likely is the Saudis are going to continue that 1 million barrel a day cut, but they would like to wind that back at some point in 2024. And so in order to do that, they've either got to get the rest of OPEC Plus on board to cut more, or they've got to say, "Hey, market conditions are doing better. We think that there's room for more supply." So what I would really be looking for is for a continuation of the status quo with the idea that they're looking to see an improvement in demand.
Ellen, do you think that the statement that ultimately comes out of this meeting will give any reference to what is happening in Gaza right now?
That's a really good question. They do tend to stay away from politics, especially the politics that don't impact them. I would assume that they are not going to make a big reference to that, unless you're talking about the safety of ships carrying oil. And I do think that in relation to the latest news that the Houthis did hijack a ship that has ties to an Israeli shipping company in the Red Sea at a particular choke point, I think this is a concern, not in that it impacts oil supplies, but that such behavior can increase shipping costs. And so a lot of OPEC oil goes by sea. OPEC oil is impacted. It goes through that area. And so it's possible they may make some statement about ensuring, safe passage of oil. But otherwise, I think they are likely to stay away from any kind of political statement of that vein.
And of course, Ellen, as we think about the conflict in the Middle East, the potential ramifications, it's raised a lot of questions about potentially further U.S. sanctions on Iranian crude, the primary buyer of which we know at this point is China, which would maybe make those sanctions a bit harder to enforce. On the subject of China, though, how crucial is it in what these players are trying to decide here because of the demand part of this equation as they're trying to figure out how best to balance supply?
I think China is really the crucial part to global demand at this point because demand in Europe, demand in the U.S. is basically a known quantity. But where's demand going in China? And that can depend on a bunch of things. Yes, China's economic conditions do play a role. But remember, this is a centrally run economy. So the government can decide to continue purchasing large amounts of crude, even if its economy isn't demanding or consuming that much crude. They can decide to just put it in storage. They can decide to refine it and sell it around the region. So there's a bit of a disconnect between what we think is happening economically in China and the amount of crude oil that China is going to buy. I do think that the people best situated to have their finger on the pulse of this are the Saudis because they have very extensive operations with joint operations with Chinese companies, petrochemicals, refining. They've got long-term crude oil contracts there. So my sense is that they would probably be best positioned to know how much crude oil China is going to be buying in the next year.